Well, hello investing fans, and welcome to our latest market report. Dion Zukiwsky, branch manager and director here at Scotia Wealth, back with you. And as you can see, sporting some sweet duds today. This jacket is actually a valued symbol of our division called Scotia McLeod here. And our firm recently celebrated its 100th year anniversary. Back in the 50s, the firm's traders needed a way to recognize each other on the Toronto Stock Exchange floor and came up with this loud McLeod action you see here. And today, it's a valued piece of our culture. Switching gears to what's happening in today's investment world, our report is going to focus on the buzzword we hear so much these days called supply chain and how it's affecting the economy. Then we'll look at strategy as we close out 2021. And today we have a new feature called Did You Know?, which is going to be hosted by the Zook Group's very own Bond Jewell. So it seems like every time a business report comes out these days, there's this mention of a thing called supply chain. We hear this a lot, but what is it exactly? Well, basically, it's a network between a company and its suppliers to be able to produce and distribute goods to the end user or buyer. Currently, there are shortages or disruptions along the supply chain across many different sectors. And the cause is actually quite simple. Over the past few decades, businesses have been working towards something called just-in-time inventory management. This is to keep costs down by having only what you need on hand. But when COVID hit, many parts of the supply chain were affected, such as the closing of factories, slowing of manufacturing, job losses, etc. As we know, what happened next was economies snapped back quite quickly, and the increased demand caused these already lean inventories to become depleted. But supply still had to catch up. And that's where we find ourselves today. Here's an interesting chart that shows commodities that are in short supply. So looking at the chart here, we're looking at commodities that have been in short supply for 5 or more consecutive months. And you can see number one is electrical components. Also in this is steel, semiconductors, plastics, etc. Many of this stuff is made from across the pond. So not only is it in short supply, but it also takes time to ship over here to North America. So as a result, we're seeing shortages in everything from computer chips to tires. Our economists here at Scotia believe that supply chain issues will extend well into next year, but eventually should get back to normal as inventories rebuild. We recently studied traffic at some of the world's busiest shipping ports that shows a peak in container vessel traffic in late September that is just starting to get under control now. So we pulled up a chart, and this is that port of Los Angeles, one of the busiest shipping ports in the world, and the traffic that sits there. At any given time, usually there's about a dozen ships in harbor waiting to be unloaded. Throughout the early part of 2021, as you can see with the blue line, that number was actually at about 20. It dipped down to more normal levels, and then into the fall to where we are today, it actually hit about 40. Now imagine that, 40 ships sitting out there in harbor waiting to be unloaded. The good news is it's come down recently and hopefully will begin to get more under control. One thing to keep in mind is that continued supply chain issues eventually work their way into higher prices, which means inflation. As we know, that has an effect on interest rates and investment strategy, which we're going to talk about next. So inflation and interest rate risk are the keys to determining when the equity markets may slow down. But when will that be? We have seen both the Bank of Canada and the US Federal Reserve come out in the past 2 weeks and alter their interest rate forecasts. Originally, rates were expected to begin moving higher by about the end of 2022, but now it's probably going to be bumped up to about the middle of next year, likely around June. However, we believe that as long as these rate hikes are both gradual and well telegraphed, our friend the Big momentum that is, should continue for stock markets. In the near term, there's also some seasonality on your side, as typically the last few months of the calendar year and the first quarter of the new year provide positive returns for investors. For our models, we'll continue to maintain a growth tilt in high-quality investments to try and capture these gains. And now, we're proud to introduce a new segment to our show called Did You Know? Today, we'll bring in my right-hand man here at the Zook Group called Bond Jewell, and he's going to talk to us something about total wealth planning.
Did you know that we offer total wealth planning? And what is total wealth planning, you might ask? Well, total wealth planning is what we use to bring your financial life to real life. It can entail planning for retirement, planning for major purchases like a vacation home, to analyzing tax-efficient income in retirement, and also looking at maximizing your estate. Each solution is carefully tailored to your unique situation. These often vary in complexity, from retirement income planning all the way up to passing along a family-run business. Where applicable, Scotia's team of experts can be brought in to deal with any situation. A comprehensive plan can add significant benefits in many ways, including, number one, helping you set and define those goals. As mentioned, these goals may include major purchases, planning for that dream retirement, or preserving wealth for your family and loved ones. Number two, identifying opportunities. A total wealth plan can provide the insights needed to help you achieve better financial outcomes by focusing on strategies that structure, enhance, and protect and transfer your wealth. Number three, preparing for the unexpected. From creating a safety net to ensuring that you have proper protection, to creating various what-if scenarios, a total wealth plan can help you achieve that sense of security. A specialist collaboration. A total wealth plan can integrate all of our specialist strategies together in one place using our team-based approach. And finally, a total wealth plan will help provide peace of mind. Research shows that physical and financial health are closely connected. A total wealth plan can help provide you with that peace of mind and sense of security. And that concludes our report here for today. Always here to answer any questions or concerns, and thanks for watching.